third one of these, trying to get into the habit more now that I've kind of shifted away from Facebook. Definitely like the YouTube more. So if you guys want to see me live, YouTube is going to be the way to do it going forward. So bunch of things I wanted to catch up with you guys about. Just haven't been able to jump on as often, so things are piling up a little bit more frequently. Got to forgive me for that. Going to try to break that habit. I think the first thing I wanted to touch on, really no particular order, guys, but was watching the markets today, was watching some of the stuff that I've really kept a close eye on lately. Price of gold, silver, also kind of been tracking copper just because of everything I've heard about, the commodity super cycle that we're supposed to be experiencing, this go around, sort of like we did, I guess, in 2008. I don't really understand that concept 100%, but I have some sense of it. So that's kind of been a thing that I've been interested in, also with the rise in AI and the need for copper, for fiber, for connectivity, for AI applications and stuff like that. That one's been on the watch list. And then I just opened up a position, posted briefly about it last week, and then acted on it fairly quickly. But SRS, ultra short real estate, is the newest position that I opened up. I did add to AT&T and to Energy Transfer, ET, the master limited partnership that pays like a 9% dividend. So had gotten some things going, in those areas by adding to those positions. But the brand new position that I opened up was SRS. And so the thing about it, guys, was when I looked at SRS, I've been tracking SRS forever. SRS and TBT, ultra short treasury bonds. Difference being that the ultra short treasury bond ETF is like $39 a share, I think, and ultra short real estate SRS was like $16. So I kind of tended towards the cheaper one, but had been tracking both of these things, guys, as areas that I thought were going to come under a lot of pressure at some point when this whole debt bubble finally burst. And so anyway, finally acted on SRS. The only distressing thing about SRS for me was that when I looked at the holdings, it didn't seem, let me put it that way, because I am absolutely no expert in this. It didn't seem as heavily weighted towards commercial real estate as I'd hoped. It had essentially, it was like 50% in like mixed portfolio. If I remember correctly, it's like 50% like mixed portfolios that included lots of different stuff, and then it had like a line item for commercial real estate. It was like 3% of its holdings. It just, let's put it this way, guys. When I read it, I was like, oh, it's not as commercial heavy as I'd like. But I might be wrong about that. All I know is that some of the developments that have been occurring most recently, like with the 2 months of increased inflation numbers and the Fed potentially backing off of rate cuts, that whole situation doesn't bode well for real estate. It just doesn't look good. Okay, whether you're talking about residential, whether you're talking about commercial, whether you're talking about retail, it just all seems bad for real estate from what I understand. So ultimately, SRS was attractive enough for me to move on it. What was interesting about it was just when I was really thinking about doing that, and you got the recent inflation numbers last week, that day SRS popped like 8%. So I missed that really big move from like the 15s to the 16s, I think it was, price-wise. Kind of kicking myself for that, kind of upset about that. But it kind of confirmed for me that it was in a breakout kind of situation. I just felt like, okay, it's time to move on this philosophically. I mean, I philosophically believe real estate, based on my thesis that I've been putting out there, that real estate is going to have a really bad go of it over the next decade, give or take. And so SRS philosophically supports that. So this is less any kind of a technical move or some kind of chart-based, decision that I made. I have no clue how to fucking do any of that shit, guys. So let me just be really clear about that. So yeah, for me, this was really about, well, wait, my philosophy is really kind of caught up to this, and now it's time to represent that philosophy by owning SRS. That's really why I did it. And the 8% move gave me like that last little push in the ass to say, okay, like let me finally buy it, So anyway, so that's really it, guys. That's what I've been seeing, in the portfolio. Like I said, gold is flying. I think at one point it was over $2,400 spot today. I've really liked seeing those 5 ounces of gold that I bought, appreciate pretty wildly. I mean, in real short order, that purchase paid off for me. I mean, again, I'm holding it forever, so it doesn't really matter. I'm not going to sell it or anything. But it's nice to open up the account and see, oh, maybe another couple $100 in there, kind of a thing. And then I think the other thing I wanted to talk to you guys about, now that we touched on gold, silver, copper, and short real estate, is this just general feeling that I'm getting. I mean, I know, this is going to sound like some kind of weird, gut feeling type stuff that has no technical, basis to it. So bear with me, guys. But I think there's just something in the air, there's something coming together when I see the headlines that I follow. I'm not talking about the mainstream headlines. I'm talking about the headlines I see from EJ Antoni's account. That's a guy that I follow real close on Twitter. Of course, Zero Hedge. Watching that account very, very closely. Of course, Peter Schiff. And other more obscure accounts. Those are some of the top line ones that I check in on a lot. But really just seeing a lot of bad headlines from a macroeconomic perspective. Things about interest rates, treasury auctions gone bad, maturing debt that's now, being reissued at higher rates. Things like that. Things that you don't see on the evening news. Things that you don't see when you turn on CBS, NBC, Fox. There's nothing about this stuff out there, guys, okay? But this is the real bad drumbeat that's kind of going on in the background that gives me the sense that we may really be on the cusp now of this big movement that I think a lot of the guys that I follow that are in this space have talked about. I put my own little version of that thesis together. I pinned it to the top of my Twitter at Wealth for Real. You guys can see it pinned to the top there. I put it in other locations. I had it on Instagram stories, put it out on TikTok. Got some negative feedback there, as expected. But my thesis that we're going to see renewed inflation coming from the 2020 pandemic, coupled with a commercial real estate collapse in the latter part of the decade, coupled with entitlement programs going under in the early 2030s. That thesis, I feel like it's just beginning to kick off with some of these things that I'm seeing from some of the sources that I follow really, really closely. And it starts off, I think, with the inflation, maybe more than anything else. I mean, the commercial real estate headlines are out there, but it's kind of anecdotal right now. It's like, oh, an office building in St. Louis was bought for $200 million a decade ago, and now it's sold for $3 million. I mean, that stuff is out there, but I don't think we don't have enough of a tailwind on it for it to create the domino effect that I think it ultimately will create. But I see that happening maybe a little bit later in the decade as things really start to unravel. I mean, I think if you go back, and I stress the word I think, or the words I think, if you go back to 2008, you had subprime failures in the 05, 6, 7 time frame. It's just that they didn't really hit a critical mass. They didn't hit that critical mass until the 2008 stretch, into early '09 when the market really bottomed out. The stock market, in fact, had totally spilled over, and the stock market bottomed out in March of '09. So I think that's what I'm kind of looking at here, is that, yeah, there's commercial real estate failures and there's bank pressures, but they haven't added up to enough yet. They haven't aggregated enough to create this massive shockwave through the economy. But I think when they do show up, they will sort of be joined by the fact that inflation is raging out of control all over again, surpassing what we saw in 2022. I mean, surpassing that situation. So that's the sense that I get, guys. I mean, a really great account to follow, and I mentioned him a second ago, is E.J. Antoni. E.J. Antoni, I mean, he definitely raises alarm bells, but he has a lot of like technical data and charts and reports that he kind of appends his opinion to, and I've really learned a lot from following him. I mean, I almost daily. I mean, if I'm on Twitter, there's a very high likelihood I'll repost at least one of his posts. So you guys will probably notice that if you're following me on Twitter. So he's an example of somebody who's really reporting what's actually going on. You know what I mean? Like, he's reporting what's going on, unlike, the mainstream news that's just casually, if at all, touching on things like, oh, is there going to be a rate hike or not, or did inflation tick up or not? I mean, Antoni really gives you the kind of the skinny on, like, okay, like this treasury auction went real bad today, guys. Like stuff like that you're just not really seeing elsewhere. You know what I mean? And so, anyway, that's something that I think, I've really found to be informative and to be helpful in understanding what's going on and what could happen next and things like that. So I've really clued in on his account. You guys should check him out. I think, I guess I'll finish with this, guys. I think, you go back to 05 and 06 and 07 and you see all these clips of Bernanke, in various outlets saying stuff that I'm sure he regretted tremendously once 2008 came around. Things that just didn't age well for him. And I think Powell's moment came with the January, I believe it was in late January, maybe it was early February, but I think it was late January of this year. Powell going on 60 Minutes and, in somewhat subdued fashion. I mean, I'm not saying the guy was like, holding some fucking pom-poms or something, but, he went on 60 Minutes and, Scott Pelle, I think, was the interviewer. Pelle kind of led him through sort of a congratulatory, series of questions about inflation and beating inflation and getting ready for rate cuts in 2024 and all this stuff. And, Powell, he was reserved, but he didn't correct Pelle. He didn't say, wait, it's too early, I'm not going to go there yet, or I'm not going to answer these questions yet. He didn't do that. He kind of went along with it. And I'm telling you right now, guys, it didn't take long, but that was less than 3 months ago. And that interview looks real bad right now. Looks really bad with the inflation numbers that have come out and the fact that, there's some real pressure mounting on the Fed, especially as it goes into this election season. What is it going to do now? I mean, before it had a sort of a green light to go ahead and cut rates, and now it doesn't have a green light anymore, but we're getting closer to the point where they would have cut them, and that would have been supportive of the incumbent president. So it's going to be really interesting to see what the Fed does, if they cut anyway or not. So anyway, check that interview out if you guys get a chance. I'm sure I posted about it somewhere along the way. If you go back to like February or so, you might see a video or two I did here on it, or I posted somewhere else about it. But yeah, not looking real good for that 60 Minutes interview with Chairman Powell. So anyway, guys, thanks for tuning in. I really appreciate you guys checking out the live or checking out the recording of this live. Like I said, I'm going to make a point to come on here a little bit more often, hopefully a lot more often, but a little bit more often than I had recently. Finding a new home for these lives and leaving Facebook for YouTube. So anyway, hope everybody has a great Monday night, great tax day, and we'll talk at you guys again soon. But once again, I appreciate you guys checking out the video. And until next time, that's all for tonight. Thanks, guys. Bye-bye.